Everyone makes mistakes at the start of their journey, but here's the top 5 mistakes that you can avoid to save you time and money. Number 1 is insufficient research. Everyone's in a rush to get fucking nowhere with their investments. And honestly, I think it's, I'm thinking about it. Do I do it? Do I don't do it? And then they do no research whatsoever. So at Aspire, we have our trademark target criteria. So we're looking at the types of properties. So for example, we do not do leasehold properties. We only do freehold or long leases, which are called virtual freeholds, 2 to 4 bed properties. Number 2, we look at the area. It needs to be in an area where the statistics line up. You have to understand the fundamentals of business and the fundamentals of property. So the tenure of property, the ownership of property, the crime rate, the social demographic breakdown, the developments in the area, and so much more that goes in. We actually have a 32-point checklist just on the area that you need to understand to make sure that you're making a long-term financial decision. And often when people get this wrong, they end up focusing on getting a cheap property or getting $5,000 off. Yeah, because it's in a shit area and it's not a desirable property. Think about it. If you can get a discount on the property, it's not a desirable property unless there is a problem with the property, the location, or the person's situation, which most of us are not going to be able to take advantage of with the speed and lack of due diligence that needs to happen. So you need to have a longer term time frame on that. Next is regeneration. What regeneration is going on in the area? With this, you need to understand what development's coming in. Ideally, it's government-backed. So in Leeds, for example, we're very fortunate to have the second largest residential development in in Europe. Pretty big, 350 football pitches, underwritten by the government, which is pretty good, and it's funded by Legal and General. That's as good as it bloody gets. With that level of redevelopment, there's hospitals, you're extending the city centre, cinemas, new towns, new schools. It's a really big deal, and that's going to drive up everything, leading to the G. Target is type, area, regeneration, growth. We need to look at growth in the area to make sure it's got the fundamental links, the transport links, the schools, good or outstanding, existing property. And what I mean by this is, I'm kind of putting in a little bit of a teaser one, off-plan, which I'll go into in a moment, but we do not go near off-plan right now. Existing property areas and type of tenant. We need to make sure that we're getting the right type of tenant. We can't discriminate, of course. That would be, well, depends on whose version of discrimination, but unfair overall. Ideally, we need the type of tenant that is going to make your house their home. So follow the target if you want to. Set your own criteria. Within target, we've actually got over, I think it's 69 points of reference for picking our areas and our locations. But in general, type, the area, regeneration, growth, existing, and type of tenant will not set you too far from getting a great property. Let's touch on that off-plan side of things, in that we don't buy off-plan property. We don't buy a piece of fucking air. Now, I'll be real with you. No, I hate off-plan. I do hate off-plan. I think there is a gap in the market for off-plan. Will I ever sell off-plan opportunities? Yes, but only when I can fully control the outcome as much as possible. So here's why I don't like them. And I'm not going to mention company names, but if there was an area of property where there is a complete fucking lack of integrity, it would be in the off-plan sales world. The big pitch is, we don't charge you a fee. It's like, yeah, because they get paid by the developer. And by the way, I'm not going to name names. I know one off-plan sales company that makes north of £90,000 a property. Okay, think about that for a second. The developer needs to make their 20% margin, and then they're putting 90,000 on top of that. So almost every single off-plan property you're buying, you are paying way over the odds in the hope that it gets done. Believe it or not, that's not the problem I have with off-plan at all. It's the fact that a huge portion of them never get built. So the way you buy off-plan is you exchange in 28 days. Typically, you pay your 50 grand deposit or whatever it is, and then the hope is that it gets built over the next 18 to 24 months and you make money. If you've ever bought off-plan, please let me know in the comments if it's gone well for you or not so well for you, and if it has gone wrong, what's gone wrong. And there are countless, I mean hundreds of our investors have previously bought off-plan, got sold the dream on there, but that's not actually the problem. It's the fact that It's really poor work quality. Sometimes, not everyone, by the way, want to be really clear. No guarantees that it will get built. No protection of actually getting the mortgage because you're assuming you're going to be mortgageable, number one. And of course, you are presuming that the mortgage will even go through at that value. The problem is, you're buying, let's say in Leeds, for example, I've seen people selling a 2-bed flat for £200,000. It's like, bear in mind, we're getting 3-bed houses for £130,000 in the same area. Now, the problem is you're relying on all of the values going up or near that in a 2-year period. Can it happen? Yes. Is it likely? I don't know. Like, I genuinely don't know. But the risk is if it doesn't get built or you can't get a mortgage, guess what happens to your fee? You don't get it back, guys. You lose the money 9 times out of 10. So let me be clear. It's not my problem with Offplan. It's the risks of the fact you are buying a future promise. Then I've seen things like assisted living within new builds and Offplan stuff. Don't get me fucking started on that because I will end up going on a proper rant. It is... No, I'm not going to. Not going to. Let me just say, I think that will be the next big compensation claim in the property world. I'll leave it there. Don't buy Offplan unless you have done serious due diligence. Number 3 is poor financial planning. Great that you've managed to save up a bulk of money. You know, people need less than you'd think. Like if you're investing in one of my areas, you need 50,000 per property. That's including all fees, absolutely everything. But I have seen a lot of people without our support, by the way, because obviously it would not happen with one of our investors, that end up buying a property. And by the way, we buy them off of people like this. They buy the property and then run out of refurbishment money. Okay, now I get there can be a change of circumstances, like there can be a situation where something happened in your business or anything like that. But I mean people that are like £10,000 short on their refurbishment. How does that happen? All right. Now, if you do your numbers properly, you want to have a bit of a reserve. So if I'm buying 2 properties, that's going to take 100 grand. And if I've got 105 grand, absolutely I would do it. But you need to make sure your numbers are right. Measure twice, cut once. The amount of people I see buying properties not understanding the full complexities of the fees, the stamp duty, legal fees, your broker fees, your insurances, the refurbishment, your management fees, all of those things need to be taken account of when you are making an investment. And the amount of people that buy properties on their own or get very poor advice and they don't know the full end-to-end of property. Which leads me to number 4, is valuing their money more than their time, which I think is a very stupid way of being wealthy. Think about it. You have got a certain mindset that got you to where you are today, which by the way is really brilliant. If you're watching this and you've managed to save that money or raise that money, that has done you very well. But if you're somebody that saved that money, let's assume you didn't inherit it or anything like that, it's probably taken you decades to build up that pot of 100,000. You've exchanged your time for money. Now it's time to exchange that money for time. And that's the shift of mindset. Your money isn't as valuable as you think. It's your time that is. The reason I say that is so many people are obsessed with doing this stuff themselves. And if you knew what happens to go into it, I don't know that you would do it yourself again. Now, let me give you an example. I do everything myself, but that's because I've got an entire company. So let me give you an idea. We will spend on average £1,000 on ads to get one deal. We'll get from that probably about, let me just work it out, 30 to 40 leads that we need to talk to every single person, analyze the properties, put in offers subject to viewing, go and view every single one, get it priced up. We've got a 111 point checklist for refurbishments, by the way, to check everything on there. So it's not even the time of going there, it's doing that and the expertise that put all 100 things together. We need to hit around 60 different metrics for it to be acceptable as an investment for us or our investors. That's within the target criteria. Then we've got to get it through legals, which takes about 12 weeks, an average of 3 hours a week. So that's another 36 hours. Then we've got to get the refurbishment done and project coordinate that. Then we've got to get it managed all the way through. So it's a huge time implication. And by the way, if you are going, hey, I want to get really involved in this, I want to build it up, then great, that's for you. Whereas if you are working full-time as a business owner, a dentist, a doctor, a lawyer, an accountant, which is typically who our customer avatar is, somebody like you watching this, then why would you use your own time and lack of experience where you can make tens of thousands more outsourcing it to an expert? Now, I have a vested interest in saying that, hands up, because I am that expert that helps people build their portfolios. But I genuinely mean it. Even if it's not me, find an expert that is going to give you the value that you deserve. And by the way, if you're watching this and you're one of those people that wants an expert and you want to have a chat with us, just put APG in the comments. We don't do a hard pitch at Aspire. APG is Aspire Property Group. APG in the comments. We'll put a link in, link it to the top. We'll send you a link, fill in your details, and what we'll do is a free one-to-one strategy session to give you some guidance. And, you know, the hope is at the end of that, you are wowed by it and you go, do you know what? I want you to build my portfolio for me, and we make some money. Happy days, right? So APG in the comments if that is you. Next is ignoring market trends. It baffles me, the fucking stupidity of some people going, I'm going to buy this property. Why are you buying this property? Because I managed to get a 5-10 grand discount. So, what? What kind of stupid logic is that? The irony is, whenever I look at the property, it was overpriced in the first place, so they're not actually saving any money. But that is such a stupid reason to buy something. Imagine you going shopping, and some people do this, I guess, go, I have no interest in this product whatsoever, and they go, but it's 10% off. 10% off? Yeah, I want it now, I want to buy it. So what the fuck is that? No, you either want something or you don't. And if you're investing in property, I always say, if in doubt, zoom out. We're not looking at the next 6 months of this. We're looking at the next 10 years. And you can tell from my voice, it aggravates me so much. And it doesn't aggravate me, it aggravates me for the person. I feel sorry for these beginner level investors getting sucked into this guru bullshit that's out there, trying to make some quick money in property. It doesn't fucking happen, okay? You need to invest in the long term. I'm getting very venti here, aren't I? You have to invest in the long term. Now, our commitment is I can treble anyone's investment in 10 years, okay, as a minimum. I really mean that. If you've got 100 grand, I can turn that 100 grand into 300 grand, and what's more, I can turn it into £1 million portfolio. But I can turn your net wealth from 100 to 300 in 10 years. That is pretty significant growth. They're talking about a 15 to 17% return on an annual basis, but that's only if you follow the right principles and fundamentals. Does that happen in the first year? No. The first year of any investment is washing its face, and people are obsessed about getting this short-term discount, and they lose out. And by the way, the same investments, they end up making 50% on their money instead of 300%, which is absolutely insane. So my guidance is focus on the fundamentals, not the quick wins. I imagine going to buy a really shit company because the share price has dropped. That's a really poor reason to buy any company. Instead, why wouldn't I buy a great property with great fundamentals and allow it to do its thing? And a great example of that is places like Coca-Cola, Warren Buffett's company Berkshire Hathaway. When you've got a company like Apple, they've got strong fundamentals, strong management, and they're a good investment over the long term. And finally, lack of exit. So every single property that we look at, we must have that secondary exit in place. And with boring vanilla buy-to-lets, it matters less, because if you do your analysis properly up front, you do your research, you work with the right people on the ground, your trade team, your lawyers, your brokers, your management agents, your insurers, your property broker, your portfolio builder, if you get those people right, it's kind of hard to fuck up. Buy-to-let properties are incredibly forgiving for idiots. As long as you buy it in the right area, you kind of can't go wrong over the long term, if in the right area. However, you should always have this secondary exit. And the amount of people I've seen with, let's think of a sexy strategy, serviced accommodation, I'll make £1,000 a month. Yes, okay, what guru was you listening to when you signed up to that? Of course, then they figure out, actually, this isn't as good as I thought. I've made no fucking money this month. And the next month, what will I do? A tenant or a guest has trashed the property. What shall I do? And all of these problems come up. Oh my God, it doesn't work as service accommodation. Now I'm going to run it as oh wait, I didn't think about that. I didn't think about what if this didn't work for me. So if you are to invest in strategy, think about if it doesn't work out. Now, the great one with buy-to-lets is, with our investors, is one of our other investors can just buy it off of you and go around, okay? So you're completely de-risked. However, the idea of a boring vanilla buy-to-let is that your retirement is death. you don't intend to sell these properties. You intend to have the values go up, and then you take advantage of that value increase tax-free by releasing the money through mortgage. Yes, you're going to pay a bit more because you're borrowing more, but you don't pay any tax on it, and of course your rents go up over time. In our portfolio, they've gone up over 50% in the last 3 years, as have our investors. So again, if you want to take advantage of the knowledge, the time, the expertise, put APG in there. But those are my biggest mistakes that you should be avoiding. Let me know if there's any that I missed. If you're a veteran in the investment world, let me know in the comments. You know, this is a reciprocity space. We want everyone to help everyone in this community. It's not just me talking to you. By the way, if you're new to the channel, you want to learn more, hit the subscribe button and the notification bell. I post videos every single week from real-time knowledge, applying it so I can help you. And if there's any videos that you want me to do that's going to help you on your journey, please let me know in the comments. This YouTube channel is for you, not for me. If you did get value, tap that like button. And if you want to invest, put APG in the comments. See you in the next video.